Hey, how's everyone doing today? Welcome back to another episode here on Let It Grow Investing. We're going to get right into the news, everything you need to know about stocks this week. Crazy amount of earnings coming in. We've got everything from Tesla, from Google, from Lockheed. We covered Next Era. We're looking at a bunch of different names from the past week, and then we're going to be looking forward to what is going on for this week. Get a game plan together and really come up with what we need to know and what we need to do to be prepped for this week. So thank you guys very much for stopping by. Please make sure you like, subscribe, and share. It definitely does help the channel grow. And I would definitely appreciate that support. So yeah, we were talking Google, right? Where I've got a lot of different things open for you guys today. I'm probably going to make my computer crash here. I'm going to try to be gentle with it, but we had a lot to cover, right? So I did have Google pulled up, and let me go ahead and share this. Let's see how we can do this one. We've got, thought I had it. We got Google? No, that's not it. We got, hold on, let me just go ahead and share directly from the page. I think I might be able to do that. Yahoo Finance is the source. I'm going to try to see if we can't pull this up through the list here. And that is not the one I want. Got too much going on. There we go. There's Yahoo Finance. All right, here we go. We've got Google sitting at 194.08. Again, another solid quarter, double-digit revenue growth from search, right? That is, a big point of contention for a lot of people is just what is Google search going to do to fight off ChatGPT and every other AI, large language model that is basically, encroaching on some of Google's turfs. The fact that search grew, their AI features have been taken pretty well. Is huge, right? The fact that they are performing well is a big nod to the amount of effort that they've been putting in over there at Alphabet. So strong performance in YouTube as well as subscriptions. Cloud is growing. We've got a backlog and profitability. Annual revenue run rate is now more than $50 billion. Capital expenditures are going to rise. This is something that made the stock a little bit shaky after earnings, right? So we were looking at spending $85 billion. I think a lot of that is going to AI, the things that they are trying to build out in order to remain the best, right? That is what they are looking to spend. So people got a little bit scared. You can think of what Metaverse or Meta or what they were spending and the amount of money they said they were going to spend on CapEx and how much that caused Facebook or Meta stock to go down. And that was just a couple of years ago. And now they're back. They've kind of turned that story around. But when they announced it, the fact that they were spending more and more money on something that wasn't really a given, they didn't know if it was going to be this foolproof thing to grow the company. That was seen as a big risk, a big negative. And then they kind of got away from it. They backpedaled a little bit. They put more into the actual business that was making money. So a lot of different changes there, right? But Google, they're putting the money into AI and they're building out that search feature, which has been working for years. And I think they have to do this in order to stay on top, right? They can't just simply remain just that Google search engine. They've got to, and my phone listens to me every time I say Google. So I got to turn that off. We got, a lot of people continuing to go to Google, but, me, myself right here, I'm looking up different things for earnings on ChatGPT to get that quick, concise report as to what happened this past week. So that is a way that you guys can do a little bit of homework and then, check and verify that the AI is, giving you the right numbers. So that is definitely something that is very helpful, but we got to take a look at what the business is doing, right? So advertising revenue came in at 71.3 billion versus expectations of 69.6 billion. Search revenue topped out at 54.1 billion. Off this, I know that they had an average of 200 billion views on YouTube Shorts per day. And now the YouTube Shorts are actually getting the same amount of advertising dollars per hour watched as their, traditional longer format videos. So they are making a ton of money on the advertising that is going on YouTube Shorts. It is highly addictive. It is that quick dopamine rush, that doom scrolling where you're just looking for the next video that's going to wow you. And none of them ever really do. It's a lot more of the same things. but it is what we are just designed to just keep on flipping and keep, those advertising dollars come in. And I've heard a lot of people, I don't know, I saw an ad on Instagram, I saw an ad on Google or on YouTube, and I figured I'd try to buy this thing, right? A lot of things we don't really need, but we see them so many times in our feed that we end up buying them. So that is definitely something where these advertisers are making money. And the more that we are watching them, the more ads they can sell us. So essentially, we are the customers of the ads that Google or YouTube or Facebook or Meta or whoever else is selling. We're simply just the customers, right? So if we didn't, watch these videos, there wouldn't be advertisers. There's just no market if we don't have the customer, and the customer is us, the end user that is watching the videos. So I only say that to go to the next point. That is, essentially, the fact that it is just a growing market, that they are getting these 200 billion views per day on YouTube Shorts, just means that this advertising money is going to continue. It means the YouTube, money funnel isn't going to run out, because we're all addicted to these things and we just keep going back to them. And, a lot of kids included, they are just drawn to these short format videos, and they don't know when to get off of them, right? They just assume not eat versus they'd rather watch more YouTube Shorts. So definitely something that is highly addictive, definitely something that Google knows, and they are making a ton of money on. But now when we get into the actual business of it, right? And I do have this pulled up. I'm going to share this one instead. We are looking at Alphabet, Google, right? We're looking at a trailing PE of 21.4 compared to a 5-year average of a 26. So they are trading lower than their 5-year average. We are trading lower than the S&P 500 average. Price to sales a little bit rich at a 3.1. Forward PE at a 20.8. 5-year average being a 23.1. So we are trading under the forward and under the trailing PE. The forward PEG ratio, that is the forward price earnings multiple divided by the 5-year growth rate, is going to be coming in at a 1.2. And, I always say, if we're below a 2.0 and you've got a high quality company that's putting up a lot of good numbers, a lot of good earnings, and they're in spaces where you like, this is an investable stock for me, right? This is something that I'm looking at. So the fact that they are trading at a low PEG ratio, they are trading below forward, they had a good earnings report. Yeah, they're spending a little bit extra in CapEx, but it has at a 10% discount on that forward PE. I think we've got some upside there. The growth is solid. Yeah, the spending is, it's going up about, $10 billion. That's probably I don't even know how many days of YouTube ads that is, but it doesn't seem like that much from what they are making on these things. The dividend, huge grower, right? We've got a 305% growth over the past year on this dividend, right? But they weren't really paying a dividend, long ago. So even though it is a 305% growth, the current dividend yield is only 0.4%. So nothing crazy to write home about there, but it is noteworthy that they are committed to paying this dividend. We are looking at annual revenue increasing 12% for 2025 and another roughly 12.5% by the end of 2026. Positive quarters, strong buys, buy ratings. We got 15 strong buys, 30 buys, 12 holds, and 0 sells of any sort. We've got earnings per share looking like we are going up here. Pretty nice little even runway. Nothing crazy, not this parabolic move, but a nice sustained growth out of a large company like Google, right? So a lot of reasons that I think this stock is probably one of the Mag 7s that I would really want to add to now. NVIDIA, I love it. It's a great company. I think that it's probably got a little bit of more pullback before it's going to run to new highs, right? I think we're already at some of these all-time highs for NVIDIA. So I don't necessarily want to chase into NVIDIA. I've said this many, many times before. I would let this thing come back down to where I want to buy it. Similar to what we saw back in April with NVIDIA, with AMD, with some other names that did give us a time to buy them, right? And now a lot of them have already run too much. I don't want to buy AMD right here, right now. It is a great company, but after this, from 80 to, I don't even know what it's at, 150 something right now run, very difficult to rush out and spend more on AMD when you know that you could have bought this thing, 90% less, a couple months ago. So not something I'm looking to rush into being AMD, Alphabet, or Google. That is something where I think we have more potential to buy right now. So that is my take there. Tesla. Let's get back over to that one. I did have a couple things pulled up, but I gotta get back to where I'm looking. We had a miss here, right? We had a decline in same store sales about 13%. And now I type Tesla, the whole name, and not just the ticker, so it doesn't want to show up. Let us get here. Let's take a look at this one. So a lot of different things, man. We have had this whole gambit of just what is going on with Elon, with him in politics, the fact of trying to start another political party. Starlink, in their latest investor note, said that Elon might get back into politics, and that was, noteworthy on their actual meeting. So I did want to bring that up. That could have a further effect, probably negative, on Tesla if he does get back into politics. Right here, I mean, you can see the little bit that I do have in this IRA. Not all that much. We are up a little bit, nothing crazy, 10% give or take. And I am trying to buy this one closer to 300. If it goes sub 300, I might wait until like 280. Maybe then again at like 250, I'll probably buy in chunks at those levels. I do want to add some, right? And I know that the EV business is dropping. We talked about this thing last time. A lot of the fact of this energy generation business increasing, service and other increasing, the fact that they are already expanding outside of Austin to a larger area, and they plan to cover a lot more by the end of the year. With robotaxis is a huge driver for potential further growth. So we got robotaxi, we got full self-drive. I do believe that will be licensed, because I don't think it is feasible for a lot of these other smaller companies, startups, or even larger, traditional names in the automotive, segment to want to build out their own when you're going to be trying to compete with one of the best. So the fact that Tesla already has it figured out, I do believe that will come down into a lot of these other service and other category, to where we're going to have more percentage of the business, not just simply being EV, but the fact that we're going to get larger into battery production, solar production, and then full self-drive and robotics. I believe these can go up significantly, while automotive maybe trends down into like the 60% range. So as these things kind of change, I do believe that EV is going to be less of a factor on their actual growth going forward. And, sometimes it's as simple as they added a different color to what the Model 3 or Model Y is, that just adds crazy amounts of market cap. It's just a very volatile stock. So the fact that, it's been doing okay after the fact of, a 13% miss on same store sales year over year. I think it can be kind of taken as a positive, right? We did have them go down, right? They went sub 300 right after earnings, but then actually no, this is not after earnings. This was after earnings. This is on the 5-day, but then we did come back up, right? So we got around that 300 level, and then we did shoot back up to like 321. So it's like almost that buy signal, to where we see it going down there. We saw same store sales drop, but we are bullish that this thing is going to come back. So we're at 317.70 now. I don't want to not be in this stock. I think it can have a huge run. I do believe that this could be, a $3 trillion company, maybe. I haven't done the actual, the breakout and the all the pricing of where they could be at 2030. I'm looking at some of the numbers from other analysts from ARK Invest. I don't think we're getting there. I really don't. But I do think this thing could 2 or 3x in the next 5 years from where we're at now. One, from all the other services, and then the battery tech and everything else that I think other companies could potentially buy from them going forward. So not the greatest quarter. They have some, bright spots on the horizon, and it is something that I want to kind of build a position back into. So I am actively trying to get this thing on some of these dips. It is tough. It is a tough stock to enter. and know where this thing is going to go. But I think long term, I think it's a solid pick, right? I do. And I know it's very volatile in the moment. I know there's a lot of noise. I know it's hard to play. But again, guys, I mean, the full self-drive in Tesla is just better. It really is. I was driving the Rivian, the R1S today, and I'm on a major highway, sun shining. I put it into their autopilot, and within 3 miles, it tells me that information for that road is unavailable. I've never once had that happen on Tesla. And that's even when you're in a dead zone and the Wi-Fi or the internet signal is not working, the car still knows where you're at rather than some of these other ones. So I just think it is a better opportunity, and I think they're at the forefront of it. I think they're going to beat Waymo at that game, and that's a Google company. But I still believe in this company long term. I know it's rocky. I know it's rough. I get that. But I think long term, I think we're going to be doing okay with Tesla. Lockheed, man, I don't understand how this one missed with everything going on in the world right now. How does a company like Lockheed miss earnings with all the war and problems in the world, right? We've got a lot of negative headlines, right? Claims on behalf of investors, all these investor alerts. We've got they cut the target here. Bernstein adjusts to 497 from 551. We've got a lot of different things saying that this is just not the best quarter for Lockheed. I've got to think that going forward, they've got to have a bright path somewhere. I don't know if it's a management problem. We still have upside from a lot of different investors. This is from Trefis. I still want to believe in this company long term. I don't know how they can have a backlog and just not produce as much as what they said they were going to. We still have upside. I do believe it was a stock that could be purchased on that dip. And I really think that they're going to figure it out. I think that the management team has done a good job in years past and quarters past. For some reason, this quarter was just a rough one for them. So the fact that there are still some bullish price targets out there, I think that we can kind of comfortably buy this one in the low fours. But I got to tell you that this quarter really did surprise me after everything that's been going on. And the fact of a lot of these tariffs getting solved. The ones with Japan were just announced 4 days ago. I'm going to try to pull that up. And then the ones with the European Union were actually just added today. So Japanese tariffs, let's see, not Reddit. I wanted just let's pull this up. All right, so we're going to share this one. This is on Fortune, and there might be a paywall that's going to pop up, but that's okay. We're going to see if we can't just get the headline here. U.S.-Japan trade deal gives Trump control over $550 billion in investments. Could be vaporware and a model for other countries. I'm not even sure what they mean by vaporware. So yes, a fifth best $550 billion in key American sectors. The White House said the money will be deployed at President Trump's direction, potentially giving him a bigger say in U.S. industrial policy, but details remain thin. Could show other countries how to clinch a trade deal with the U.S., even as analysts question how real that money is. So $550 billion of tariffs coming in at 15% from Japan. And now if we go over to Google and we just look at what the European Union tariffs, let's take a look here. This was 5 hours ago. CNBC, what do we got here? We've got EU trade deal with 15% tariffs, right? So key points, Trump and European Commission President Ursula von der Leyen announced that the U.S. has reached a trade deal with the EU. Very powerful, very powerful deal, very big deal. The biggest of all the deals, Trump says. The U.S. president had previously threatened 30% tariffs on goods from the EU. And Trump said it was about a 50-50 chance that they'd make a deal ahead of this meeting. Trump said that the deal imposes a 15% tariff on most European goods to the U.S., including cars. So your foreign European automotives are going to be more expensive in America. That is what that is going to tell you. it will be passed on to the consumer. They always are. So some products, including aircrafts and their components, some chemicals and pharmaceuticals, will not be subject to tariffs. Okay. That's probably a solid thing on pharmaceuticals to not, terribly affect drug prices in the U.S. Also said the new 15% tariff rate would not be added to any tariffs already in effect. Okay, so the 15% is lower than Trump had previously threatened. Art of the deal, I guess he's going to call it, is the fact that he was asking for 30, knowing that he'd go to 15, and then everyone looks like they win. Trump gets 15%. The European Union said, well, we dodged 30, we landed on 15, and we still get to sell to the U.S. So that's how that looks to me. I'm sure that was probably one of his plays all along, but you got to throw out that high number to get to where you want to land. So yeah, we've got these announced, right? So that was the deadline of August 1st, right? So these have been making some big announcements. I don't know that everyone has been signed to a deal at this point, but I do think that we are basically getting to where a lot of the main players are in a spot where we are a lot more comfortable. So yeah, I did lose my my background effect, so you just get my wall behind me, but that is what it is. We've got next era. They did miss on earnings, and Disney. I was looking at Disney. Disney is an interesting play here. Earnings are going to be coming out on August 6th, I believe that was. Let's go ahead and pull up Disney, though. I did just want to take a look at it. It is one that I've been holding for quite some time, and it's been one that I wanted to get out of for quite some time as well. It is just a stock that has really been difficult to deal with, right? It really hasn't gone anywhere for like 10 years. If you look back, and we're going to do a 10-year poll right here, we're going to take a look at just what the price of Disney was, right? And this was at 101. Is that right? 101? Yeah, we're looking. This is back in September 1st, 2015, high of 105. And then, we fast forward even back to April of 25. This thing was at $90.95. Very, very painful, right? Very painful to see a stock that is the quality of Disney lose money over 10 years is ridiculous. So now that we are at 121, where do we go from here? A lot of different things to take into stride with this one. When we are looking at this chart, I do want to pull up a 6-month, right? We're going to look at this 50-day moving average being this dark line, and then the 200-day moving average being this like orange line. Now, this other purple line, that is just the stock price. We are looking at a 50-day moving average that came down through the 200-day. This is a bearish signal, but then by the time, and sometimes it is a false signal, you thought this was going to be the point to sell. This has actually turned really quickly and became the point to buy. So this was definitely a head fake right here. This looked like it was going to be sending this stock down, but it's simply because this stock price trailed for so long here that the 50-day dropped from, up around this 113 line down to around 81, probably even lower than that. We probably got maybe even into the 70s. So now this quick turnaround, this would have been your golden cross where the 50-day comes back through. This would have been almost too late, right? It crossed around this 117 line when the 50-day came through to the 200-day. Now, going forward, what do we expect? Well, we did have a CEO change, right? Bob Iger came back to Disney. There's a lot of bullish things that are looking solid for this company. I'm saying this kind of about the fact of where this one would have faked you out here, and then you're almost getting in too late if you're simply just looking at a long-term 50-day versus the 200-day moving average. You missed out on, I don't know, 30% of gains, maybe a little bit more than that. So not necessarily always the best, right? This is going to be a late signal to actually enter this position. But I do think it does have some staying power as they are getting things back in order. Now, do I believe that all the travel is going to be perfectly smooth right now? I know that there's some banks saying that, or some earnings were saying that a lot of travel is going down. The airline numbers were a little bit shaky. And is it going to affect Disney? I'm not too sure about that. They did have some blockbuster movies coming back out. We had Fantastic Four rockets to $118 million debut. Paramount deal, I'm not too familiar with that one. Disney stock is ready to rally after a lost decade, right? So stock at a recent 121 is trading where it was on August 4th, 2015. Basically what I was just saying, right? A lot of lost time in this Disney stock. We have a lot of green over here when it comes to analyst research. If I'm looking at some of these different analyst guidances here, these stock reports, it's going to look like a buy. 5-year return of only 3.7%, which is awful. 1 year, 8%. So this year has been the year that it's coming back. But if you've been in this thing for a while, it has been a painful stock to own. We do have some upgrades. We do have some upside. We have an average price target of 131. Some of these quarterly earnings are going down. 25 is coming up on earnings. And then if you're looking over here on the average for 2026, it would be about 55 cents higher than where it was in 2025. So some plus side there. We do have earnings of the last 6 quarters being positive. Annual revenue will be coming up, but not that much. 4% for 25 and another 5.8% by the end of 26. Dividend, yes, that was reinstated, so it did come back up in a big way, 216%, but that dividend yield kind of looks like where Google's is, right? Or Alphabet's. Not a big yielder, but it is nice to see that they are feeling strong enough that they can actually raise that dividend. 41% discount on forward PE. If we go down to forward PEG ratio, it's a little bit above the 5-year average, but they didn't really have growth over the past 5 years. So now that we have some growth, people are looking to get a little bit more excited about this thing, and they have been running up this stock price, especially in the last 3 months. So if you got into this thing, 3 months ago, you might have been paying a 1.1, but maybe that was a little too early for you. You just didn't want to be in a name like Disney that hasn't done anything for 10 years, and I completely get that. Price to sales, I mean, it's cheaper than the 5-year average. It's cheaper than the S&P 500. It's probably not a terrible time to buy this thing. You're getting a discount on forward PE, on price to sales. The forward PEG is a little bit rich, comparatively speaking, but still cheaper than the S&P 500. So, I do believe that we might have missed a perfect entry point, but I do think that there is a lot more interest into Disney right now than what we've been seeing in the past. All that to say, earnings are coming out on August 6th, so we are keeping an eye on this thing. It might be a time where I finally write some covered calls. I'd be willing to part with this thing. It has been a painful stock to own for quite some time, and it is one of the first ones that I bought. And I've been holding on to it thinking it was going to make some money. And it's probably been about 10 years since I probably bought into Disney. And it has not been one of my better picks. So maybe I get out of it. Maybe I put it somewhere else. Let's move right on to SOFI. Let's get into SOFI real quick. I will pull this one back up. I do want to show just what has been going on here. I know we've been talking about this one a long time. Huge run year to date. I mean, if you got in back in April, you got in under $10, and now we are over 21. Now, we do have earnings this week. This is going to be coming on Tuesday. Earnings on this company tend to be beat and outperform, and then the stock will trade off, right? It hasn't really been rewarded for a lot of the quarters. And now we've actually got a case where this thing has run so strong. I would not personally buy any of this before earnings because history shows us that the price drops even after a solid quarter. So I don't think that this would be a great time. I would personally wait until after. That is what I might be doing. I do have a significant amount of shares in SOFI. I do have covered calls written on this thing. I might try to close some of them if I do see this thing drop. If they drop below 20, I will probably close some of these covered calls and potentially buy some more shares. That might be something that I do with this one. The earnings is set to just continue this stairway right where we want it to be going, right? This looks great. This earnings is just fantastic. It looks so predictable and just continues to be going the right direction. I still believe in this stock long term. I think Wall Street did not believe in it for a long time, and now they are finally catching up. But I believe it has gone up too much, too fast, and I do see that this thing could come back down. I'm not even going to put a number on it to where it could potentially go, but it could be a large drop after earnings. If history repeats itself, they still beat, they outperform, they could even guide higher. And sometimes this thing is just going to sell off. So take that with a grain of salt. I wouldn't, particularly go after this thing until we get some more clarity as to where the stock price goes, and especially after this run with earnings in 2 days. So not one I'm rushing out to buy on Monday, not one I'm adding until we get some clarity after where these earnings come in and what the stock price does, more importantly, because I think that they're going to beat, but I still think that the stock is going to get punished. What do we got? I did want to pull up the Webull portfolio, and let me see if I'm going to share this one. Just how do I get to, and I've told you guys before, I am terrible at navigating this on the computer, but we are looking at ETH or Ethereum breaking over 3,800. There is a new interest coming into the crypto space with everything going on in the White House with stable coins, with trying to build out that. I think that's going to play a part in SOFI going forward as well, what they do for crypto. The fact that Bitcoin, let's take a look at Bitcoin on this. Bitcoin's not what I want. Bitcoin to the USD, that's what we want. 19,601 at the moment, up 1,300 on the day. And man, it has just been rolling. It has been absolutely rolling up. So, if we've been in Bitcoin from, it wasn't that long ago, guys, when I was telling you to buy it below 20,000. And man, we would have 5 or 6x by that measure. And that's only been like a couple years. I haven't been on this podcast that long. So that would have been massive if you got into Bitcoin at that given point in time. Congratulations. Hopefully, someone used the link and got started buying on either crypto.com or on Webull. There's a lot of different things in the links that you can get some different offers out there. But what I'm trying to show you guys is just how this portfolio has actually done. I don't want that. Where are we? The good thing about this thing is we are finally up over $10,000 in the Let It Grow Investing Challenge account, right? We are sitting at like $44,000. You can see the positions here, and this is just our actual positions that you guys have helped build over the course of the past 3.5 years. So we've been doing pretty well with this thing. I'm trying to see if I can get the actual gain that we have on this one. And I, again, am not the best at navigating this thing. This has just got to be from the last day, because I know we are up more than that. Open. Is that how much we have invested in this thing? No. Sorry. Back up. I didn't get that right. Yeah, I can't pull it up the same way that I want to, but these are all the positions that we've had added to this investing challenge account over the course of that time, right? There's a lot of names. Some of them are small positions. Some of them we've built up doing our dollar cost averaging over time. Some of them haven't performed that well. But we've done, overall, I'm very happy with the fact that we're over 30% of growth in that short time, buying some names that we were all doing a little bit of homework on at the same time. We're all kind of going through them. And, some of them we got right, some of them we didn't, and some of them will come back, and, some of them are probably going to the wayside. But I'm happy that we started it. I'm happy that we are continuing to add that $200 a week into a stock that we are all looking at in kind of real time if you're watching it as these videos come out. But thank you guys for voting on them. And hopefully we can continue to have this thing going. And I just want to see how to actually get to this account, but I cannot do what I'm looking to do. Can I do it here? No, I'm not even gonna. I don't think that's what it is. Anyhow, nonetheless, we've been doing all right. I'm gonna move forward to Palantir. Palantir, man. This has been another stock that we have just been riding the wave of. I think it has done fantastic for us, but when is that fun gonna run out? That is the real question, right? So we are looking at a stock that put up revenue growth of 39% year over year in the US, right? Revenue growth of 55% year over year. Revenue raises fiscal year 25 revenue guidance to 36%. But when does this fund run out? Right? We are looking at a company that, again, they have the rule of 40 increased to 83% in the quarter. This is going to be their revenue growth and their margin. So they are over that, right? But what happens when they are only trading at a 40 and not an 80? That is the big question. Can we continue this growth to where we're looking at revenue growth of 39%? We're looking at margins in the 40% range. And I think that is where the fun stops, right? I think that's when we just do not see these monumental growth numbers. And that is the big question as to when that slows down. So yeah, these numbers have been huge. I know they just got that $800 million defense contract, which I forget what the 3-digit or 3-letter branch, or it might have even been an Army contract. I'm not even 100% sure. They get so many of them, it's hard to keep track. Let's see if we can't get anything on Palantir right now as to just what is going on with these contracts that I'm talking about. And I could probably Google it quicker than trying to find it on E-Trade. Let us pull this up. Palantir new contracts. Let's take a look. Palantir new contracts, and we'll take a look at this one. Primarily with the U.S. government, focusing on AI data analytics. DoD contract $795 million for Maven, $400.7 million follow-on contract for Army Vantage, $100 million contract for next generation command and control platform with the U.S. Army. So DoD and the Army. So more huge contracts, but I want to take a look at what this earnings is going to be doing and just see what this is looking like. We're going to share this tab instead. We are looking at earnings of about 2.87 billion and then 3.9, 5.08. But is these numbers going to just continue and continue? And I don't know that they're going to slow rapidly. I mean, this is a great earnings projection, right? But I think we're going to have some of these jumps be not as significant going forward to keep that 39%. And when that drops off and when we get below that 39% growth, that is when I think we're going to start to see this thing slow down, because people are not going to be throwing money at it hand over fist when they're only putting up 25%. And the margins are coming back down as they have a little bit more competition. Maybe not directly with the U.S. Government contracts. Maybe those contracts pretty much stay locked up. Once the government gets in with something like this, they tend to stay with them a long time. But some of the other industries might be a little bit more sensitive to a shakeup. Maybe they can't continue to charge that margin because another company steps in and they kind of start to shrink on that. They have to offer something that is, comparable to Palantir, but at a lesser price. And then Palantir is going to have some erosion of market share. They're going to have to make some changes as well. So I don't know that that's going to happen right this second, but I do want to point out to the fact that the fund will slow down. And when it does go below some of these monumental numbers, these 39% year over year numbers, I think that is when we start to see a slowdown. So I would be watching the earnings on Palantir and see just what's going to be going on over there. I do think that is going to play the next role into just what happens. You can, check things like Palantir's investors relations website to see just what is going on. So you do have like this 39% year over year growth, but we can take a look at what's going on going forward, right? We're going to have revenue of 934 to 938. We will see they are raising the revenue guidance for full year 2025. So that's another bonus to Palantir, right? We've got these commercial revenue guidance being raised to 1.178 billion. representing a growth rate of at least 68% in that segment. A lot of different things that are going really, really well. But when these numbers drop below this 39% year over year growth, I do believe that that is going to be where some of the fun starts to come out of Palantir sales. We are looking at a stock that has a significant amount of downside. And I will pull this tab back up. We are looking at a stock with about 31% of downside. Do I think that it is going to drop to, this 109 overnight? I don't. It could happen, but I think a lot of people are looking at the valuation on this thing. These PEs stretch so remarkably high at like a 676 times on trailing 12 months. So that's the trailing PE. But going forward, it isn't, it's not a cheap stock by any stretch. So if I go over here and I'm looking at this report, we are looking at a forward PE of a 253. So we're paying through the nose for the growth. But when that growth slows down and this PE spikes even more, when earnings aren't going up at a 40% clip, that is going to be when this thing comes down. So just know that, yeah, it's been doing great, but there is that point where we're not going to be paying that much for this thing. And you really want to pay attention to those numbers, right? Annual revenue, 36% up this year. And then we're still looking at like a 40% gain by next year. But what is earnings going to do? It's still creeping up. We got a 58-cent annual revenue or earnings per share on Palantir. And then we're looking at a 73-cent as the average. So we are looking at some solid growth. But I do believe when these numbers slow down, or if they miss or have to pull guidance or lower guidance, that is going to be a big, big problem for Palantir. So if you're in this thing and you're up on this stock, I know a lot of people are way, way up on Palantir. Maybe you want to take a little bit off the table. You never lost money selling at a gain. I can't blame you for taking some profits at this point in time. So that is my thoughts on Palantir. It's a great company. I do believe that it can go up for the foreseeable future, maybe the next 2 years. But I do want to take a look at this thing closely and be monitoring where these growth numbers are. Because if they drop, and eventually they will, it's going to be potentially painful going forward. So I did pull that up. Let us go to stocks this week. I did have this pulled up somewhere in this mess of tabs. I probably can figure out how to do this some way easier going forward. I think I navigated off of it already. So let's look at this Google search. Where did I have quarterly earnings this week? And then I had that, and then I wanted to look up most anticipated earnings this week. There we go. So I'm going to share this instead. And Google AI, which has been firing on all cylinders, tells us just what's going on. PayPal. A lot of people saying to buy PayPal. Boeing, they're getting a lot of different traction with a lot of the tariffs, and a lot of people saying that they're obligated to buy more Boeing products. SOFI, we covered that one. United Health, man, I hope they can do something and get out of this rut. I've been buying it up, and I really hope that they can get things back in order. Procter & Gamble, I'm still not sold there. Starbucks, I did look at this one this week. Nothing that really stood out like I have to buy Starbucks or get back into that position. It's okay. It's nothing that I have to have right now. Microsoft, that is going to be an interesting one. We will be watching that on Wednesday. Meta, Ford, Qualcomm, which I've been out of for a while. Robinhood, I still don't think there's anything there that I want to be in. AbbVie actually looked a little bit cheap. I was just taking a peek at that one. That could be definitely looked at before earnings, I think. Take a look if you're into that space. Bristol Myers, probably in the same boat as AbbVie. That one makes a little bit of sense. Amazon, I still believe you can buy and hold on to. Apple, man, they got to do something for me. They got to do something. I don't want to buy any more Apple right now. Amazon really is a solid play going forward. Coinbase, I know a lot of people have been buying Coinbase. Roku, probably in the same boat as what a Coinbase is. And Vertex Pharmaceuticals, I'm thinking Viking Therapeutics. Vertex is another solid player, though. Palantir, we just covered. And yeah, that is what's going on for this week. definitely some stocks to watch on Tuesday and Wednesday. A lot of people reporting, as well as Thursday, probably midweek, Tuesday, Wednesday, Thursday. Those are going to be the days that have got a lot of earnings coming out, a lot of different things that we want to take a look at, see where Spotify is. Hopefully UPS can get some numbers in there. That would be fantastic. I know with tariffs, there were a lot of people were spooked out of UPS. But the U.S. consumer has remained strong. They've been buying, and I think with a lot of this tariff news behind us, maybe we can get some clarity as to just what's going to happen for UPS and the amount of sales that are going to be done with their business going forward, especially getting out of some of that Amazon deal as well. A lot of different things there. So yeah, that's what I'm watching. That's what we are looking at this week. I do believe a lot of these can be purchased, but the market is priced to perfection overall. So you do have to kind of sort through them and figure out what stocks you want to be in and why. Like I said, SOFI, I'm holding off. United Health, I've been buying. UPS, I've been building up a position there while it's been selling off. We're at north of a 6.5% dividend. AbbVie, MasterCard, I like both of those. CVS, no. Bristol, maybe. Apple, hold. Amazon is a buy for me. MicroStrategy, I've been in the MSTY, which is that yield max dividend income portfolio. And man, those have been paying, the ULTY, I believe, pays weekly, and MSTY pays monthly, but they are paying out crazy dividends. I know there's a lot of underlying things, but the NAV value on those is remaining pretty strong. So that is keeping MSTY. I'm typing that over here on E-Trade. We're looking at 130% dividend. They are trading options backed by MicroStrategy stock, which is heavily tied to Bitcoin. So as Bitcoin goes up, they should be able to make a decent amount of money for MicroStrategy because of the amount of Bitcoin that they own. And I think that could be valuable in the fact that they are writing this 130% dividend yield that pays monthly is huge. ULTY, let's take a look. I do believe that is a weekly payer, weekly dividend of about 10 cents on a $6.27 fund, and that is paying 121% yield yearly. Well, this thing has gone down. I've seen it stabilize here. I probably entered in this general area, and I've been adding, but I've been probably paid out half of this, my investment at this point, simply by the dividend that they're able to pay out, which is insane. But nonetheless, it's not a huge position, but it is something that I'm trying to get some more dividends, right? And I like to see these dividend incomes continue to increase while having a lot of stocks that are not tied to dividends at all. Again, I do have some covered call options written on some of these big names for the fact that I think they're priced to perfection. Palantir, NVIDIA, Broadcom, which continues to just outperform. The three of those have been such huge gainers for my portfolio, but I do have some options written on them as some of these PEs are really stretched. The AI trend is a boom, but I don't want to, be there when this thing kind of comes back down to earth. So the fact that it's trading at 105 times is crazy. NVIDIA, I don't think is trading that high. Let's take a look real quick. We got NVIDIA at a 55 times on the trailing, which is a lot cheaper going forward. And then what was the last one? I said Broadcom, NVIDIA, Palantir. Palantir is trading where? We just looked at that one, 676. So again, I'm in these options, covered calls, because they are so expensive, and I don't know that they stay there forever. So if I can sell out of them, Palantir, I think I have it written at 160. It might be at 160 for August 8th. NVIDIA is at a 177.50 strike. And it's sitting at a 173.50. So if it goes up another $4, I am trading out of 100 shares of all three of these. So that would potentially give me 70 grand to play with into this account, based on the fact that NVIDIA would be $17,750. My Broadcom would be $30,500 because it's at a strike price of 305, and I'd be selling 100 shares. And then what was the last one? Palantir would be at 160. So that's $16,000, 33.47. Yeah, something around like $63,000 if I sell, if these three positions go above those strike prices by August 8th. So I've got a week and a half left. We'll see where they go. We'll see what happens. I do believe that some of them could pull back on some of these earnings and or guidance. So we'll see what happens. But that is about all the time that I've got for you guys today. Thank you very much for stopping by and hearing me rant and ramble for the past, how long have we been on this one? 53 minutes. This is my longest episode in quite some time. And I didn't think I had that much to say, but I guess there's a lot out there. So thank you guys. And please make sure you like, subscribe, and share. And I will catch you guys in the next one. Take care.